Today, what I just want to teach you, what I want to show you is how I trade, how I make money consistently from the forex market. Okay? Hello, who is that? What did you say? I want to. Oh yeah, mute yourself if you are not talking to us. Okay? I want to show you how I have not had a losing week for the past 6 to 7 to 8 months. All right, that's what I want to show you. How do I do it? All right, how do I do it? But before I go there, I want to just briefly, explain the inspiration I draw from this music I just play. Music by Flavor. There are a lot of things the man say. If you like, don't like the way he dance. If you like, don't like him. But as for me, I'm not interested. Even the one he used Igbo to say, I don't know what it means. But the one he sang in English, I could pick some things there. He said premium or nothing. Premium or nothing. So, when I heard it, premium or nothing, oh, no problem. Whenever I'm trading too, if I am not at premium of that trading range, I am not interested. So I added my own discount or nothing. If you don't give me discount of 75 to 90%, I am not interested. Okay? The man said, undisputed. Okay, undisputed. I use that undisputed to mean, oh, my system is undisputed. You can't dispute it because it is something that you can verify. All right, and once we say it is like this, it is going to follow like that. Once we say this is how we see it, it is going to be like that. Not because we are intelligent, no. Not because we are so diligent, no. But because we understand how the market is framed. All right, we do not complicate the entire market system. Even though we are aware that the system by which economy runs now is complicated, far more complicated than it used to be. That is why it looks as if somebody with so much knowledge in the forex market cannot make money. It's not your fault, it's not my fault. No. The way market was running even 5 years ago, 7 years ago, it was easier. It was much more easier for people to make money. But why is it more difficult now? The more we gain knowledge of the market, the harder it is to trade market. Why? Because there is a lot of complexity in the running of all major economies in the world. Okay? There are complexities. There are situations where you have to require the central bank intervention in the economy almost every month. Almost every month. Okay? There is complexity in the market because there is efficiency. There is greater efficiency in information management. Okay? You see, you get hold if a Reserve Bank of Australia should release a monetary policy rate today, the whole world will get this information within a second. And every investor, every trader all over the world is taking decision based on that information. That is why the way I see it, I process buy, you process sell, this one process buy, this one process sell. You now see that the market is not in one place again. It's consolidating more than trending. So it's really very hard to trade the market. That is why we need to also go extra mile to develop, ways, system that will make it a little bit more easier for us. Do you understand? Okay, so we have a system that is undisputedly good. Okay, it takes somebody, it will take somebody a great effort, okay, to oppose whatever we say, because we don't argue. If we say this is how it is based on how we know it, if you say it's not like that, give us your own perspective. When you give us your own perspective, let's see. You don't need to argue in forex market. Whenever it finishes playing, the person who is wrong in his analysis, we don't need to even tell you that it's wrong. The market has spoken. Do you understand? So he said money is nothing. This is the most important thing. Most of you think money to be something, and that is where you are where you are. What am I saying? You think money is something. Some of you, you know so much, but you are getting so little because you pay too much attention to your phone. Too much attention to your phone. If you, to the extent that if you lose a trade, you don't want to take responsibility. You don't want to take responsibility for the loss. You kept blaming your losses on markets. Let me tell you, you cannot win everything in the market. I wanted to try it, okay? I wanted to do 100 trades without losing. I lost at trade number 34. I always mention it, USD card. And as soon as I lost the USD card, I lost interest. Okay, I said I'm not going to continue. If I had lost at 70, 80, then that would be a good distance. But at 34, I lost and I stopped the stuff. Okay, thereafter, I kept on thinking within myself, you know, and something told me, guy, trading is a game of probability. You know that. Nobody, no trader all over the world can tell us that consistently he can win all his trades consistently. It's not easy. You can't do it. If your analysis is right, market will do its own thing. Do you understand? But understanding risk management will set you apart. Okay? It will do what? Hey, who is this now? Nore, now you. Understanding risk management will set you apart. So that's just the brief thing I want to say concerning the video on the flavor video. All right, I love it so much. I get a lot of inspiration from it. So now, how I trade? How do I trade? Because I see some of you are too serious. You are too serious about trading. You see, somebody is posting on the free group, premium or nothing, discount or nothing. Well done, Charles, well done. Okay, so number one thing I do. How I trade. That's what I want to show you today. How I trade. Okay, you will notice that each time I come to the market is when market just move and give us profit. But when I'm out of the market, you see that market don't give us anything. You will understand why today. How do I trade? All of you who are here, I can say 80% of you have access to my mentorship content. All right, whether by virtue of me giving you as a friend or you being you being in my mentorship group, you will have got it. But there are some people from free group who will not have gotten my content. Okay, so there are a lot of things that we'll talk about that you may not understand. Please pardon me. All right, just pardon me. Is that okay now? So how do I trade? Number one, I calm down. What do I say? I calm down. Okay, I calm down. Most of you don't calm down. Most of you think that it is compulsory that when you come into the market in the morning, you must place a trade. All right? Most of you think that it is compulsory when London starts, you must click a trade. You think it is compulsory when New York starts, you must trade. Maybe they say they said that New York has the biggest volume in the market, so you must trade. No, calm down, calm down, calm down. It's not like that. Let me tell you, okay, the people you are trading with, the people you are doing business with in the forex market, they are not your mates. They are not your mates. Most of you don't recognize this from the onset. You think they are your mates. How much do you have? How much do you have? You are depositing $200, $300, $500. Highest among you, $1,000, $2,000, $3,000. You want to compete with somebody who is trading with 1 billion pounds, $3 billion, and you don't want to calm down. Hello? You don't want to calm down. If you don't want to calm down, he will calm you down by force. And when they calm you down by force, I swear, you go cry. You go cry. The people that you are dealing with, if they calm you down by force, you go cry. So if you want to avoid that cry, calm down on your own. Tell them, say, I know, now you get them. Now you get this market. But I follow you. I follow you. Calm down. Calm down. Okay? Before I move to the next stage, I still say calm down because some of you, there is no planning. There is no trade planning. There is nothing like, this is the one I'm going to do today. But some of you are doing everything. Calm down. Don't be so. I don't take a trade without knowing it a day before. Hello. Can I come again? I cannot take a trade today without knowing it yesterday that I will take it today. My analysis and everything about the setup yesterday will have shown me that if today it comes this way, this way, this way, this way, I will take it. If you come, for instance, let me show you something. For instance, you have a structure like this. Keep on doing something like this. Keep on doing something like this. I will say, tomorrow, and here, this level, this price level is 10 o'clock in the evening. I will say, if this market can just break up London tomorrow and come right down in New York like this, I'm going to take it. Can you see? Whereas the market is still here. I'm already projecting if it comes like this, I'm going to take it. That's planning. Planning. And then I will wait till tomorrow. If it does this and come down right here, it means that I have not taken that trade, but I'm already right in my analysis. Because what I expected the market to do is doing it. So it's not just that I just open a chart and say, okay, which one? Euro GBP, Gugu, GBP, JPY, Igbaga, gold, Igugu. No. What we are going to do tomorrow in the forex market, you are already planning it today. You are already planning it today. Why? Why are you planning today what you will do tomorrow? The reason is that the setup that I trade, that makes my trade to be so much successful, takes not less than 24 hours to build up. It takes not less than 2 hours to build up. 24 hours to build up. This structure you are seeing on 15 minutes time frame will take 24 hours to build up, I swear. 24 hours to build up. So I cannot just come to the market and just say I want to trade, boom, 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 without planning. No! But most of you are not doing the planning. You are not planning. You just come in because they said London has opened, so you must trade. You start. Because they said, hey, New York has big volume. You just come to New York, you start. When did you plan that trade you are taking? That is why it will take you out. And not only that, you just start on one. You click this one, buy. AUD USD, buy. Gold, sell. Euro USD, buy. This one, you do everything mercilessly. You mess up the whole system. Trading is not like that. Calm down. What do I do? What is the first thing I say you should do? Calm down. Calm down. You have learned technical analysis. That is not the end of the whole thing. You can know technical analysis more than I do, and you will not make $1 in this market. You will never withdraw. You can know it more than me. You will never withdraw. If you don't pay attention to all these things I'm teaching you. Because I know there are few of you who understand it. There is nothing I will mention that you don't know it, but you are not making money. You are not making money. Why? There are a lot of things in the forex market that is much more than technical analysis. It's much more than what? Technical analysis. That is part of it. Calm down. That is the first thing. I think everybody understand calm down now. Everybody understand calm down. If you don't understand it, I will play for you. Baby, calm down. Calm down. I will play it. If I cannot play it now, when you get home, go and play it. Baby, calm down. Calm down. Market is not going anywhere. Calm down. Is that okay now?
Yes, sir.
Two. Pre-markets, pre-session market analysis. Pre-session market analysis. What I'm telling you, all this I'm telling you, if I package it and deliver a seminar with it, people will pay not less than 200,000. Okay? Pre-session market analysis. Pre-session market analysis. That is the next thing that I do. You see, sometimes when you get serious, I will see in the group, people are very serious about trading. They are very serious about trading. That time I'm calming down because I know there is nothing. I calm down, I know that there is nothing. Okay? All right? 2, pre-session market analysis. For instance, if you want to trade New York, somebody is noisy in a way. Can I identify that person and just mute that person? Okay. Seen the person. All right. Pre-session market analysis. What do you mean by pre-session market analysis, guy? If you make up your mind to trade New York session, for instance, do we agree to use New York session?
Good.
All right.
Good.
Okay. Now, we want to trade New York session. This is where we want to chop our money. After you have calmed down, you want to trade New York session. There is no point you coming to the market 8 o'clock and come and resume with London. You are wasting your time. You are doing what? You are wasting your time. In fact, coming to the market by 8 o'clock to come and start looking at market we do, what market we do, will make you to start seeing what you are not supposed to see. You are wasting your time. You have already proposed within your mind that I want to trade New York session. Okay? Why don't you wait an hour or two before the commencement of New York session so that you do your pre-session market analysis? And you remember that pre-session market analysis will be in line with your trade planning that you did yesterday. Remember I told you that a trade you are going to take today, you will have done the planning down since yesterday. Is somebody listening to me?
Yes.
Good. You will have done the planning. Maybe you have seen this yesterday. This market has ended here yesterday. Let's say it ended here yesterday. You now look at it. This is discount. Discount or nothing. Discount or nothing. This is where you will love to buy this market. So in your trade planning, you will say, okay, what if you break to the top here? Okay, and maybe in New York, London, New York overlap, it does a mitigation. Boom, here. I would like to buy here. Can you see? So when the market was still here, you were doing your trade planning of what you expect to see tomorrow that will make you to take the trade. But when you are now doing pre-session market analysis, you do it 2 hours. Let's say New York session is starting 1 p.m. You can start doing your pre-session market analysis by 12, 11:30, 12. Start watching. The mitigation you are expecting, are you going to get it? Watch. If there is news, okay, I will come back to that. You watch. Okay? You watch. Watch what will happen. If this mitigation happen, boom, boom, by that time that you wanted to trade, if it happens this way, you remember pre-session market analysis. This mitigation will not have happened by 12 o'clock. You'll be watching. As soon as it is 1 o'clock or 1:30 or 2 p.m., you just see boom, mitigate here. It means that what you plan that you will do tomorrow has come to maturity. Okay? It has come to what? Manifestation. And since it has come to manifestation, you are now eligible to trade. You are now eligible to trade. So that is the implication of doing pre-market analysis. And then when you are doing pre-market analysis, in that 2 hours before the real market, you know what you are going to do? You know that you are expecting a buy from here. You have to go to forexfactory.com. Somebody is talking. I don't want talking here. Mute yourself if your side is noisy. Okay. All right. So part of what you do in pre-market analysis, which some of you don't do. How can you call yourself a complete trader? Excuse me. If you don't do this, how? You are expecting a buy here of euro dollar. You now need to say, okay, if this mitigation eventually happen, what will warrant this buy to take place? What will make euro to be very strong at this particular point in time? What is that thing? What is that thing? That should now lead you to forexfactory.com or tradingeconomics.com. You want to go to the news session. You want to go to forexfactory.com. Bogo. Are you seeing Forex Factory?
Yes, sir.
Yeah.
Good. You now go to news session. News session. Do you know that when it is 2 hours before New York Open, you will begin to see headline that is related to United States economy. You now begin to see headlines that are related to what? To Canada. All those North American countries that are about to open their market. You begin to see headlines that are related to them. Look at it. US dollar buying cooled by intervention fears in Asia. Week ahead, US GDP and Bank of Japan decision on top of next week agenda. Economists boost US GDP forecast. Economists boost US GDP forecast. Sees federal rate higher for longer. So when you click this news now, boom. This is 1 hour 53 minutes ago. Can you see? You read it, even if you are not an economist. If you read the news and it's going to be helpful for the currency, you will know it is written in English. It is not, there is no language called economic language. It is written in English. So you read it. If there is any concept there you don't understand, go to Google and Google it. So once you understand those headlines, you will find out within yourself whether those headlines will support your buy trade. Will it support this buy trade? Will it not support it? If it will not support it, you will be careful. If you plan to risk, oh God. If it will not support it, if you plan to risk $300 for that trade, you change your mind and just risk $150. If it will support it, ladies and gentlemen, you go in full force and risk what you want to risk for the trade. Because you have seen structure has played out right here. Structure, correct? Sorry. Structure, right? Pricing, right? Timing, right? This is 3D, right? 3D, right? Now you now go to fourth dimension.
Yes, sir.
For the fourth dimension is technical indicator, and the last dimension is economic indicator. That thing I told you to go and read in Forex Factory under news session or tradingeconomics.com on the news session. That thing I asked you to read there is to support this your buy decision, and that is what is called economic indicator. Okay, and then with the use of RSI, you can actually determine whether this particular setup, okay, right here, higher low, okay, right here, lower low. This is bullish hidden divergence, which is a proof of the existence or validity of trend continuation. So you now take this, you now see that 1, 2, 3, structure, pricing, timing, technical indicator, fundamental indicator, 5 dimension. You cannot ascertain the potency of a setup with 5-dimensional analysis, 5-dimensional approach to market analysis, and you don't win it. This is my top secret in the Forex market. I make sure all these 5-dimensional approach to market analysis support my analysis, and with that, I'm on my way to the upside. That's why most of the trade I take, they hit TP. Boom, they will hit. Why would they not hit? One thing that can disturb the trade is the fundamental, and I go into the fundamental to study the integrity as part of my of the dimension to the market analysis. Is that okay now? So this is what is called pre-session market analysis. You have to do it. You have to do it. But I can say with a measure of confidence that 80 to 90% of you don't do pre-session market analysis. You just wait when the session comes. Ichaka, Ichoko, Ibaga, Ibogo, Ibaga. This
You're
week,
right,
I took only 2 trades the whole of this week. 2 trades. And I won the 2. And whatever is happening in the market, I don't know. It doesn't interest me. And let the market stay there. Next week I will continue. Why are you interested in just clicking trade here and there? Wait for your opportunity and get it. But then you must do what is called pre-session market analysis. This pre-session market analysis is what will ensure that you always do your analysis on 5D. It is what will ensure that you always do your analysis on 5D, because that is what is including technical analysis and technical indicator and economic indicator. Both of them are confirmatory, strategy to your what? To your structure, timing, and pricing. Structure, timing, and pricing. If you don't respect these 3, you have yourself to blame. Kubrat was taking a trade yesterday. Her trade respected structure. Her trade respected timing. Excuse me, her trade did not respect pricing. And I told her the trade will fail. Confirm to me now if the trade succeeded. Did it succeed? Kubrat, you are here. Did the trade succeed?
No, sir.
It cannot succeed because you were doing the analysis. You were doing the analysis on 2 dimensions. You cannot do analysis on 2 dimensions and it will succeed. If it succeeded, you were lucky.
No, it didn't. I closed it.
If it succeeded, you were lucky. And we don't want to trade with luck. Nothing concerns us with luck. We want to trade with a measure of authority. Not because we are intelligent, but because we have evolved a trading system that is evidence-based, that is data-based. We don't do it on our own. We can stand anywhere in the world and defend what we have prepared. Do you understand? If you are taking trade on 1 dimension, you can never withdraw in the Forex market. If you are taking trade on 2 dimensions, you can never withdraw. And statistics shows that 80 to 90% of traders all over the world are trading on 1 dimension. All right? And what is the 1 dimension? Structure. Structure. You are trading on one dimension, and that one dimension is structure. And even the structure upon which you are trading, you are not even doing it the right way. You are not doing it the right way. So if your structure is right, your timing is right, your pricing is wrong, your trade will fail, your setup will fail. If your structure is right, your pricing is right, your timing is wrong, your setup will fail. It will fail. But if your structure is right, your timing is right, your pricing is right, excuse me, you don't have anything to fear. Go in and take the trade. Don't fear. And the more you are consistent in respecting this three-dimensional approach to market analysis, the more you will make money in the market. The more you disrespect one of them, excuse me, I swear you won't withdraw. And then if you learn how to do pre-session market analysis, then you will be adding economic indicator and technical indicator into your analysis. That means you are doing analysis at the topmost level, which is 5D. You are doing your analysis on what? On 5 dimension. 5 dimension. And that is what makes you a pro. That makes you a pro. You can say, I keep telling you, gold has no way to come down. Israel struck Iran overnight, and you see gold shoot up, boom, to the upside. What did I tell you? Don't look for sell. I've been telling you since Monday, do not sell gold. Do not sell gold. That was the first thing I told you on Monday. Because you saw me selling on Friday last week, I knew where to stop. Okay? And when it was right to buy, I said, do not sell gold. Did I not tell you on Monday? Has gold dropped? No. Why? I've done my pre-session market analysis, and I have seen the economic indicators that support gold's strength. And today is still very strong. It's as simple as that. Okay, let's move to the next one. Do market screening. That's number 3. I hope some of you are writing. What I do, number 3, I do market screening. Market screening. Undefeated. I do market screening. How many of you do market screening here? You don't do market screening. You trade anyhow. You don't trade anyhow. Please, from today, you have to be doing market screening. Look at my watch list. How many pairs are there? Minus DSY. I don't trade DSY. Check. How many? Somebody answer me. 1, 2, 3, 4, 5. How many?
4, sir. 4.
5. Can we count again? How many pairs are there?
Your screen is not showing you. Is it showing? It's not showing here.
My screen is not showing.
It's showing, sir.
It's showing you,
It's
Mr.
5.
Johnson. It's 5.
5.
1, 2, 3,
Yes, sir.
4, 5.
5 pairs.
It's 5. It's 5.
Yes. So I have 5 pairs. And let me tell you something. There is what is called major pair, and there is what is called minor pair. I'm taking you now to basics. Okay? One of my students is here on this course. She just completed basics. If I switch to her, if I give her a notation now to teach you, you see how he will wrap up. There are many things you're supposed to know at basic level that most of you don't know. You don't know, and it's affecting you at a professional level. It's affecting you at a professional level, but don't worry. Those that made full payment for my mentorship program, I'm going to give them free access to my website when it is launched. There you can go back. There are a lot of things that you have not heard from me before, but in my course and in my program, you will hear it there. So if you made full payment for mentorship program, you are going to get full access to the website. You go back and learn all of them. Now let's go back. Okay, I said major pair and minor pair. But before major pair and minor pair, let's do major currency and minor currency. Okay, it's just a little bit digression. Major currency. Oh yeah, can we mention major currency? USD, GBP,
Euro. No, that one.
Euro,
CAD.
AUD, CAD, Okay.
CHF.
CHF. Okay. All right. So, and JPY. Let's say JPY. These are major currencies of the world. Okay. And then you have minor currency. But now, let me now show you something. When America, what's the currency of the United States of America?
USD.
When America, the great America, when they do business with any of the country that own this major currency, the pair that you will exchange, the currency pair that will be involved will be USD and that country currency. Is that not?
Yes.
And when you compare the USD with that country currency, you get what is called the major pair. For instance, if United States does business with Canada, you have USD card. USD card is a major pair. If United States does business with Britain, you have GBP USD. Abi? If United States does business with European Union, you have Euro USD. Abi? If United States does business with Japan, you have USD JPY. If United States does business with Switzerland, you have USD CHF. Abi? So these are called, you can see all these that we call major currency, they are major economy that does business with United States of America. But when a major economy that owns a major currency does business with another major economy with another major currency outside the United States of America, you will arrive at a minor currency pair. For instance, if Britain does business with European Union, you get Euro GBP. Euro GBP is not a major currency. Hello? Give me any two currency outside United States here. Let's pair them.
AUD.
Okay. When AUD does business with Canada, you have AUD card. AUD card is not a major currency pair. Then when Euro does business with Canada, you get Euro card. Euro card. This is not a major currency pair. If Great Britain does business with Japan, you get GBP, JPY. These are minor currency pairs. Therefore, I understand that investors and economists all over the world are interested in the performance of the major currency pairs. They are less concerned with minor currency pair. Because of this, there are low liquidity in the minor currency pairs and there are major liquidities in the major currency pair. Number one. Number two, because of the level and volume of transaction that happen on the major currency pair, the cost of transaction on them with the broker is very low. It's very low. It's almost nothing. You pay almost nothing by trading USD card, GBP USD, Euro USD. You pay almost nothing because there are big volume, big money injection into these major currencies, and there are less injection into minor currency. So because there are low injection of money to minor currency, your broker charge you higher in the way of spread. By the way of spread, they charge you higher. If I calculate well, in a whole year, what they will have charged me if I was trading a minor currency pair last year would be in excess of 15,000 to 20,000 US dollar just by trading the minor currency pair. But I do not. I understand this. Therefore, I screen them out and I concentrate my effort on major currency pair. That is where the money is. That is where the movement is. But I see most of you are trading AUD card, GBP AUD, Euro GBP. You are wasting time. You are wasting time. What I make in gold, the moves I make in gold in 30 minutes, you cannot make it in AUD card in 1 month. Hello? You can make it in 1 month. You are wasting your time. So what I do is market screening. And I have to make you to understand this background before I go to market screening. Now, you know why I come up with major currency pair. You know why I don't trade the minor currency pair. And you know why we call them minor currency pair. And why I trade the major currency pair and why we call them major currency pair. That has been settled now. Is that okay? Has that not been settled? Has that not been settled? Good.
It has been settled.
Good. That is why you see major currency pair right here, guys. Now, the next thing now is, okay, am I going to trade everything? No. What I do is I do market screening. I put all of them. I put them on 1 hour. If my higher time frame is 1 hour, for instance, I don't know your higher time frame. Your higher time frame can be 4 hours, it can be 15 minutes, it can be 5 minutes. I don't know. But what I do, I go to USD card. I put it on. So what I do is this. When I wake up in the morning, the first thing I do, I look at all the pair I trade, about 5, the cleaning good. I look at them. What are they doing in the market? What are they doing? I ask myself question. Based on my system of trading, what are they doing? Which one? By the time I look at all of them, which one is going to give me opportunity today? Okay? So when I look at all of them, which one is going to give me trading opportunity today? I will screen them out. USD card, not today, I beg, not today. In 24 hours, you cannot even give me setup, out. GBP USD, you can't give me setup, out. Gold, very correct. Gold is giving me a good setup. Euro USD giving me a good setup. Good. That's good. Can you see market screening now? I have screened all my pair out except Euro USD and gold. Those are the two that I'm looking forward to that will give me opportunity today. I say, okay, now I want to trade one. I don't want to trade two. I want to trade one. How do I do it? I will now look at it and say, okay, what I will do is that, if it's a buy setup, maybe you have something like this. Definitely this setup now will definitely have a convergence, Abi. So maybe they are all doing like this. And I want to take this one to the upside from here. Okay? Maybe this is what I want to do. And this is gold. This is gold, ladies and gentlemen. And then Euro USD is giving me something like this. Seek before you eventually go like this. And then I also check, ladies and gentlemen, I also check that this one also have a convergence. This one also have a convergence. Boom, boom, and boom. Convergence. Okay, this one also have a convergence. Boom, boom, and boom. You understand? This one has a convergence. This one have a convergence. This is EU. Excuse me. What will I now do? Which one do you think will give me greater potential to push sharper to the upside? If I take them.
Good, sir. The good.
Good. This is where I will now go and look at the reference move. This is why you see me talking of reference move. I will go to the reference move and check which one has a very good move, which one has a fine gear without pimples. I'll go to that one. This is the one. Today, I'm not trading Euro USD. I'm going to trade gold. Why? Because gold is presenting a better opportunity. This is what is called market screening. Can you see how I've screened the market from 5 pairs that I trade? Screen them to 1. I screen them to what? 1. I have screened them to 1. When this one gets here, the structure is right, the pricing is right, the timing is right, and madam, okay, I've muted that. Okay, you can see that this particular setup, the structure is right, the timing is right, the pricing is right. You are on 3D, you can take the trade without fear. Take the trade. And then if you want to add the fourth and last dimension, Then you add technical indicator and economic indicator. How do you add technical indicator to this one? You want to see, this is a trade continuation setup. You want to apply a divergence that have to do with trade continuation, and that is bullish hidden divergence. You activate it and check, is it in line with what the indicator is talking about? If yes, then 4D is correct. You have to ask, what is that fundamental that is capable of pushing gold up? You now have to go to USD news, commodity news. Right now, the only information that is available to us that is capable of making gold to be bullish is Israel-Iran crisis. Middle East instability is what is going to make prices of commodity to go up right now. Then you can see that 5-dimensional approach to market analysis is all fulfilled. Structure is fulfilled, timing is fulfilled, pricing is fulfilled, technical indicator is fulfilled, economic indicator is fulfilled. You take this trade, only God Almighty will say you will lose. Only God Almighty, no human being will make you to lose, because you have taken into consideration all the totality of human psychology in the whole world. That is what you have taken into consideration. Do you understand me now? Do you understand me now? This is what is called market screening, guys. This is how I screen the market and come up with a powerful opportunity that I take. That is why it's as if anytime I'm coming to the market, I'm coming out with money. And when I don't come to the market, it's as if market is not doing anything. These are the things I do before I come. Some of you just come to the market. No. And because of this thing that I do, when I take my trade, I close my phone and drop it somewhere. I go and play. I will go and play. I will go and play. I don't have business with the trade. I've set my TP, I've set my stop loss, I've set everything. The trader has no business going against me. Do you understand now? Let's move forward. So I've said you do your market screening, and I've told you how to do market screening. All of you trading a minor pair, I beg you in the name of God, stop from today. You are enriching your broker. You are enriching your broker. If you use my affiliate link to register your account, okay, if I'm telling you not to trade the minor pair, it means they are not going to charge you much, and I'm not going to make much money. But my source of income is not affiliate commission. I'm not a marketer. I'm a trader. 90% of my income comes from trading. If I produce material and you refuse to buy, I will still make money from the market, because I'm not a seller. I'm not a marketer. I'm a trader. Hello? So what is the point? Telling you not to trade a minor pair just because I want to make much commission from you. How much commission am I going to make from you? How much? Trade the major pair where your broker cannot charge you higher. They will charge you. The spread is almost zero. When you trade euro dollar in New York session, the spread is almost zero. I'm paying almost no transaction cost when I trade. My broker don't love me. They don't like me. And when your broker don't like you, you know that you are doing it right. Yes. When your broker don't like you, it means that what?
You are doing it
You
right.
are doing it the right way. Yes. When they love you, hey, Mr. V2, you are trading the minor pair. They are charging you commission very well. I say, Mr. V2s. Stop trading the minor pair. You are enriching your broker. They will not like me to say this. You are enriching your broker. Start trading the major pairs where there is liquidity, where there is volume, where there is money, where the cost of transaction is low, where the spread is almost zero. Okay? Let's move forward. I've told you to look for potential opportunity. That is why you do market screening. Also look for fundamental reason why such opportunity should be reliable. I've told you, when you have gotten your setup, you must tell us the fundamental reason why the setup will be reliable. What's the fundamental reason? That's why I chip in that time. Some of you have never read news. You want to be a complete trader. You don't want to read news. You don't want to know what is happening all over the world. You are joking. You are joking. You are joking. You think it's technical that control this market. It's fundamental that control this market. You can see how I literally pieces the market last week Wednesday or last week Wednesday when they release CPI. You see how we analyze everything. You see how everything's spot on. You see how we were correcting Forex Factory. When they are saying that CPI will come down from 0.4 to 0.3, you say, where did you read your economics? Where did you read economics? No way. It cannot drop. And I concluded by telling you that if it drop, I will be so surprised. I will be so shocked. And if it drop now, the next one is going to catapult to the upside. I told you. And I told you that I was still insisting that it's going to rise. And based on that, I put a sell on gold. Put a sell on EU. Put a sell on GU. Put a sell on AU. I risked very high, terribly high. But under 5 seconds, most of the trade hit the RTP. Boom, 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 boom. And that was the last trade I traded last week until Friday. Okay? Made 150% of my account under 30 minutes. Why? The power of knowledge. That is what I'm telling you. Okay? So, you must read news. Okay? You must read news. Alright? So, another thing I do is that there's what Yoruba call ojukokoro. Ojukokoro. I beg, so people that read English, who knows how to do speak English very well, tell me the interpretation of ojukokoro in English, I beg.
Covetousness.
Somebody said covetousness. Any other one?
Greed, sir, greed.
Maybe greed. Many people will understand greed. I am not too greedy. I am not too greedy. That is why we came up with a calculation. It's a rigorous calculation. All right? To come up with a fib level of minus 0.27. That, when your setup is correct, that level is sacrosanct. That level is compulsory. Market must touch it before it relaxes. It must touch it. For instance, if you are going to take this trade, I want to ask you a question, guys. Where are you going to start projecting your fib? Is it at this level or this level? This is level number 1. This is level number 2. Which level are you going to start projecting your fib?
Level number 2. No.
So if you say number 1, mention your name and say number 1. If you say number 2, mention your name, say number 2. Where are you going to project your fib?
V2 say number 2.
V2 say number 2, okay? Who is next?
I'm also saying number 2, Felix.
Felix say number 2, okay? Another person. Kubrat.
Solomon say number 2.
Solomon say number 2, okay? Kubrat. Johnson, where are you projecting your fib? Number 1 or level number 2?
I'm just returning back to sit now.
You don't need to watch anything. It's a simple thing. This is a structure. Where are you extending your fib? Is it this level or this level? See the structure here, my friend. See the structure here.
Okay, that's number 2.
Okay, number 2. Okay. Okay, another person
Level
want to
number
talk.
1, sir.
Who said level number 1?
Bolariwa.
Bolaniwa said
That's
level
the
number
last
1.
one.
Okay, another person support level number 1. Okay, only Bolaniwa level number 1. Level number 1, you are wrong. Level number 2 is correct. Why? Why are you wrong? Why are you wrong? Now let me explain. Everybody listen. Okay. Now, you know Fibonacci taught you Fibonacci theory. But excuse me, did it teach you the level for which you must be extending your Fibonacci? Was it taught? It was not taught. Do you understand? So it is not you guys' fault. But most of the guys who have been following me in the mentorship program, they know where to extend the fib. But anyway, are you in the mentorship program?
Yes, sir.
Are you and you are still telling me about level number 1?
Yeah, because I thought you were supposed to extend from the demand level.
Well, okay, in this case, the demand level is here. Just listen to me. Let's not waste time on this. In this case, the demand level is here. Why is the demand level here? Because you already have a convergence. This thing is making a higher high here, and then on the price is also making a higher high. The indicator is making a higher high. There is a convergence. So because there is a convergence, you don't expect this inducement to be taken. And since inducement is going to be taken, it will form your demand zone. All right. So when you are extending your fib to be extended from this level to this level, and this right here becomes your 75 to 90% level. So you need this market to come here for you to buy. So when it comes here, you need now to do something. What is that thing? You need to find out. Is it the time that Oyibo is taking coffee that the market will return there? If Oyibo is taking coffee here, please, I beg you in the name of God, don't take it. That is 11 o'clock. They say, our UK guys in the house, they say it's 11 o'clock that Oyibo used to take coffee. Don't take trade when they are taking coffee. They are the owner of the market. They are the one that own this money. You are just following them. So when they are taking coffee, they never pump money. They know they on their system. Don't go and execute trade. Wait. If you execute trade by 11 o'clock here, let me tell you what will happen to you. Market will go up here and come back by 2 o'clock. Take you out before it goes. Oyibo is telling you that I own market, then you want to control it in my absence. What is wrong with you? What is wrong with you? Then I say, sit down there. They will force you to calm down. When Oyibo force you to calm down in Forex market, you will cry. You will cry and they will not look your face. Do you understand now? So, but when you come here, Oyibo don't ready to pump money. 2 p.m. Hey, 2:30 p.m. Shege. Carry your trade from there. Boom, to the upside. Structure, correct. Pricing, correct. Timing, correct. Boom. If you want to go further, technical indicator, correct. Economic indicator, correct. 5 dimension. Boom, carry go. Do you understand now? So, now, what am I saying here? I am not greedy. I am not greedy. Look at it. Let me clean up this thing. Look at what I have here. Boom, boom, boom. So this return here. We are not just taking this trade because it has returned to demand. You remember there is something we saw before we discovered that it cannot pass this place. We are not just taking it because we are trading a trend line, one bullshit trend line somewhere. That's not the issue. All right? Are you getting it now? Remember, we have seen something. So what we do is that we extend this view from this level of demand to this level and mark 0.75. That's my TP. 0.75. Okay? And then where's my entry? 0.27 rather, minus 0.27. Okay? If this is my entry here, I will extend this one to this level. Okay? And then my stop loss will be just below 100. Like this. This is how I trade. This is how I do it. So whatever happens here is none of my business. If you like, come here, go again, until you come here, boom. And most of the time, if I operate at 15 minutes time frame, my TP will hit that day. My TP will hit that day. I'm not looking to take it to the moon. No, even if you take it, even if you go to the moon, I'll just take this one. Sometimes, when I'm ready, when I want to trade, when I'm ready with the chart, when I'm busy, I will operate at higher time frame, 1 hour, 4 hours. But when I'm with my chart, I operate at lower time frame, 15 minutes. So when I operate at lower time frame, the setup will hit TP usually that day, and I will go. It will hit, I will go. I will go. I don't know if you understand. So, but most of you, you will agree with me that most of you will take your trade will go almost to hit TP and come back to come and hit your stop loss. Because you want to gain the whole world. You want to gain the whole world. No. The one that God gives to you in this market, take it and run. Have a moderate expectation. You cannot make the whole money on one setup. And at the same time, you should not allow only one setup to break your account. In as much as you cannot make the whole money on one setup, do not also allow one setup to break your account. Do you understand now? That is how I trade. Now, after I have entered my trade, I will assess the trade. Listen to me carefully. This level now is very, 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 very important. I will assess my trade. Okay? If you check my trade history, you will discover something very, very important. What is that thing you will discover? What is that thing you will discover? That thing you will discover is that you will not see my trade hit stop loss. It's very rare. Not easy. It's not easy for my trade to hit stop loss, but I get red. Why do I get red? Immediately I enter the trade and the trade is going. If it's going at a pace that I don't like, if it's not going at a pace that I like, it means something is wrong. Maybe volume is not in the market. Excuse me, your analysis can be correct. Everything can be correct about your analysis. But if there is no volume, what can you do? What can you do? You can't do anything. You don't have money to inspire, to engineer volume into the market. Do you have the money? You don't have the money. Even your country don't have the money. All the money your politicians have stolen, combined with the CBN and all the banks in Nigeria, they don't even have the required liquidity to move Forex market by 1 pip. They don't have it. They don't have it. So what will you do? So when you assess your trade and it's not going well, it has spent 2 hours in one level, I don't want to waste my time on just one setup and begin to have headache about it. I cut the trade. Even if it is at minus, I'll just cut it. I want it to move. That's why I enter you. So why do I enter you and you remain in one place? I will cut it and wait and reassess the trade tomorrow. Do you know the reason why I have to reassess the trade tomorrow? It is possible that, it is possible that the required volume that the market is seeking in order to be able to push is not available, even though the mitigation has been done. So because the volume has not been available, it will struggle, develop structure. Tomorrow it will now come down. Now I can take the trade to push me to the upside. This is what I do. This is what I do. Do you understand now? Finally, on risk management. Now, there are some of you who are performing. You are performing excellently well. But the kind of money you are supposed to be making, you are not making it. The kind of money you are supposed to be making, you are not making it. Why? Because of fear. Fear is the problem. And I'm going to break it down for you right now. I will break it down for you right now. Fear. You see, you heard a flavor. What did he say? He said money is nothing. Money is nothing. The way he interpreted money is nothing could mean that money is everywhere. They have money. Okay? That's the way he interprets it. The way I interpret money is nothing is that when I'm trading Forex, I don't value money again. I don't place too much value on the money I'm using. Meaning that when I lose a trade, in as much as I follow my risk parameter, my risk is in accordance with how much it's supposed to be. If I lose it, it's none of my business. Let it go. Let it go. If your risk is good and your risk to reward ratio is good, you can lose 3 trades, you win 1 and you are in profit. You are in a profit. So, how do I risk? When you are trading, there are 2 things that determine your risk. 2 things determine your risk. Number 1, average RR. I think I've told you this before. Average RR, risk to reward ratio. Number 2, what is it? I've taught you before. Somebody tell me something. Tell me something. Somebody tell me something. Hello?
High probability setup.
No, that's not the answer. 2 things that determine that should determine your risk. Your average risk to reward ratio. What is the second
Your
one?
win rate. Your win rate.
Your win rate. God bless you. Win rate. Mr. Said, it's win rate that is the answer. Your win rate. These are the 2 things that determine what risk you should be taking in the market. There are some of you, when you are trading, you are doing 1%. You are doing 1% risk. You are just shortchanging yourself. I swear to God, who created me, you are shortchanging yourself. By your level, you should be doing 5%. You should be risking 5% of your account. And then some of you, you are doing 1% of your account. I swear you should be doing 0.2% of your account. Yes. Do you know why it is so? Very simple. See the reason why it is so. If your win rate, if your average RR is 1:5 and your win rate is 40%, excuse me, there is nothing in the market that says you should not risk 3% of your account per trade. That is, if you have $1,000, there is nothing that suggests you should not risk $30 per trade. Because when you win, you are having 1:5. That is, if you are risking $30, when you win, you are getting averagely $150. And when you lose, you are losing what? You are losing what? How much? $30. So what this simulation is telling us is that if you are having a win rate of 40%, it means that in every 10 trade that you take, excuse me, you are winning 4 and you are losing what? 6. 6. Win, loss. Right? Then, if you are winning 6, if you are losing 6, how much have you lost? Times 30. How much have you lost? I want to ensure that you understand. How much have you lost? 6. You have lost 6. 180. Answer me. Yes, 180. Since your average, yes, $180. Since your average RRR is 1.5. I've heard you. It's network that is the link. I've heard you. If your average RRR is 1 to 5 and you have won 4, then each of the trade is how much? Each of the trade is 150. 150 times 4. Times 4 is how much? $600. Can you see now? So if you minus it, how much have you gotten? $480. $420. God bless you. Can you see it now? So you can see that I have been able to match win rate and average RRR. I'll be able to match the two to determine what percentage of your account you are supposed to be risking. But let's do something. Suppose this is trader A. Trader B, you now have trader B. Trader B is having a win rate of 10% and an average RR of 1:1. Okay? What does it mean? In 10 trade that this man takes, he wins what? He wins 1. He lost 9. Okay? And because he's risking and this man, because he's an idiot, he's also is looking at V2s that is risking that is having this parameter and is risking $30, 3%. He's copying V2s and he's also risking 3%. So what does it mean? This man in 1 he got $30. Okay, this one he lost 9. He lost how much? $270. So minus $30 win from $270 loss. This man is having
$140.
Loss or gain?
Loss.
Correct. This man is having $340 loss. Are you guys now getting why some of you lose in the forex market? Are you getting it now? Because you are not able to determine this parameter. What are those parameters? The win rate and the average risk to reward ratio. When you know these three parameters, you know where you belong. But let us assume that this gentleman is able to calm down and know himself as a trader who is not knowledgeable yet. And he knows that his win rate is 10% and his average risk to reward is 1:1. Then this man will just decide to risk what? 0.5% of his account. 0.5% is what? $5. Is it up to $5? Yes, $5. $5. Are you getting me now?
Yes, sir.
So since this man is risking $5, he won one trade. The man get $5. He lost 9 trades. The man lost how much? $45. If you minus the win from the loss, he's losing how much now?
$40.
40.
So now the implication is this: even though the gentleman who is having a win rate of 10% and an average RR of 1:1, even though he's not making money, it will take him up to 3 to 4 to 5 to 6 months before he eventually loses his account. And within this period, it is possible that God will bring him somebody that will save him. And when God brings him somebody that will save him, he will still have a certain amount in the account that is going to use to trade based on what God sent has told him. But the idiot who is copying V2s and is having 10% win rate and 1-to-1 risk to reward and is using 3%, before Savior came or before Savior will come to his rescue, he will have blown his account. He will have blown his account. Do you understand what I'm saying now? But
Yes, sir.
if you are having too many losses, okay, let's say you are having 30% win rate, but your average risk to reward is 1-to-8. Shege, this is one of the best traders in the world. That is, when you take a 10 trade, you win what? 3, you lost 7. Abi? This 3
You lose 2, you win 8.
I said, what is the win rate? 30% now.
You win 3 and you lose 7.
You win 3, you lose 7. That's what I said now.
Yes, sir.
Yes, sir. Yes, sir.
Okay, so if that is the case, with 1-to-8 risk to reward, so now if it is if you are now risking this trader now decide to risk 5% of his account, because even his win rate is not too good, but his average RR is 1-to-8. So which means that is risking $50 of his capital, of his 1,000. So this $50, 1-to-8 is 50 times 8. This is 400, and
400.
he wins 3 trades. That is 1,200.
200.
Yes, this guy lost 7, and each of the trade is 150. Each of the trade is risking $50. So $50 times 7.
350.
350.
This man is losing $350. Minus the $350 from the 1,002. He's getting $850. This is how I trade, guys. So I'm not interested in the number. I'm not interested in how many trades in a week. I want to take 10 trades in a week. No, that the wait. All the steps, all the procedure I have explained to you, I have showed you today. I watch them. And once I arrive at the one I want to take, I am coming out with money 8 out of 10 times. What do I say? I am coming out with money 8 out of 10 times. This is the 3rd time I'm trading this week. Today, and I'm trading gold. 3rd time I'm trading this week. 3rd time, and I'm trading gold. Okay? Waited till New York session. Okay? Waited till New York session. You see, this level was not created by New York. Is that correct?
Yes, sir.
Good. So I was just waiting patiently. This level that was not created by New York, let it be invalidated. I just want it to be invalidated. Once it's invalidated, any move that follow thereafter is my trade. That is number one. Okay? You understand what I'm saying? You understand what I'm saying? Okay. And then New York came. You have this,
Yes,
you
sir,
have
I do.
this, you have this, you have this mitigation. I pick my trade. Boom. Boom. That's what we talk about. Can you see? All these things I'm showing you, I have planned it since. As I woke up, saw this one, I say, thank God, opportunity is coming to the upside again. Because there's Iran crisis. Opportunity is coming. So if I measure this from here to here, I'm just targeting 0.27. Okay? 0.27. Why? I've analyzed this market based on 5D, and they are all correct. They are all correct. They are all correct. No one is missing. I say, based on that, this one has to go to the upside. If not, today is Friday. This trade will hit 1 to 14 risk to reward. And look at it here. Boom. Getting to the level here. The previous high that it dropped from last week Friday. You remember how I sold from the top here? I will explain to you the yardstick behind it another day, not today. How I sold from here and took profit here. Okay? So you see it? But today is Friday. I will close any moment from now. I'm not interested. A greedy man, we want it to go and hit TP even when it is Friday. Next week it will now come like this. Come like this and redevelop. Then all your profit is gone because you are a greedy man, because you are a greedy woman. Okay? Don't place school fees, house rent, everything. Don't place everything on Forex market. That's why you are too serious. That is why you are too serious. The less you play emphasis on it, the less you are serious about it, the more you see your opportunity clearly and take it. If you are coming to the market and you are seeing opportunity every day, hey, you are not getting it right, oh. You cannot see opportunity every day, oh. Someday opportunity will come, you will miss it. Leave it. You want to trade everything? You want to kill every move in the market? Everything in the market will kill you. And by the time they kill you, your colleagues in the market cannot rescue you. Don't trade everything, no. I beg you. Now, this is where I'm going to anchor. This is a summary of how I trade. Apart from the technical analysis that I have taught you, apart from everything I have taught you, this is how I trade. I take it so simple that I'm looking for work to do to add to this trading. Because it's taking too little of my time. Too little. A whole day trading may not take more than 1 hour or 2 hours of my time. Then what will I be doing in the remaining 24 hours? That is why now I devote more time for research. I will make a lot of cracking discovery about this market in few months to come that will shock everybody. It will be so good, so nice, that literally everybody will make money except a non-entity. That person is not a non-entity, he will make money. Because there is time for research now. There is time to read. There is time to discover a lot of things that are happening. There is time to look at intermarket analysis and relate them to. We want to even know whether gold will move this afternoon or it will not move. We will know before that time. What are we going to see before we will know? We are doing research on all of them. Is that okay now?
Yes, sir.
All right. That's where I'm going to anchor. Ask your question. Before you ask your question, who is attending our session for the first time? I'm seeing Muhammad. Okay. This is my friend. I'm seeing literally nobody is new here. I sent this link to the Free group. Can you see? Do they attend? That is why I don't teach them there. They are not serious.
Yeah, sir.
No. Olakunle, you are always present. Who is that again? Who is that? Is there anybody who is from free group here that's here? Mavis?
Yes, sir. Yes, sir.
Okay, Mavis, yeah, that's good. I know. Yeah, from
Thank
free
you,
group.
sir.
Another person from the free group? You can see? Very, very, very unserious people. You will give them free session, they will not attend. And later they will say, you don't come and teach us, you don't show us anything. How can I show you anything? When I see that full of bunch of unserious people full that place, that platform, I will close it before the end of this year. I will close it. I don't want to see it again. I will close it. All right, I'm going to close it. So if you are there, you are serious very well, let me, anytime I send link there, always join so that I know that you are serious. Before I close it, I will put you in a platform that you will benefit and you will learn fast. Then I will close that one. Let them go back to their house. Only marketers will be developing channels. I don't want to see that channel. If I want to market anything, I'll go and pay Google. I'll go and pay YouTube and market my things there. I'll go and pay Facebook and market my things. All right? Any question?
Yes, sir. I have one question.
Oh yeah, say your question. Your question, okay?
Sir, let's say we are using the 15-minute time frame as our trading time frame. Because last week you said we only need one time frame.
Yes,
you
sir.
understand, to trade.
Yes, sir. Yes, sir.
Yeah. So, can reference move be formed outside New York session? Like can a reference move be formed during London? And how can we verify that reference move is valid? Because most of my back testing, I've actually not really found reference move that was formed in London and then they held. You understand? So most reference move that held based on my back testing are from New York overlap. Yes,
correct. That is very good question, Vitus. That's a very good question. Yes, most of the time, reference move form in New York session. Look at it here. We don't need to go far. Reference move. We don't need to go far. Reference move. We don't need to go far. Reference move. But this is not New York. Okay? Now, your reference move will usually form in New York session. But you have exceptional reference move that are not formed in New York session, but you will still have to respect them. Let me not say just New York session, because 5 p.m. in the evening is also a New York session. Okay? But you remember that the best reference move we want is that which is formed during London-New York overlap. Are you getting me now? Hello?
Yes, yes, sir.
Yes, the best reference move is that which is formed during London-New York overlap. Why do we want a reference move to be formed during London-New York overlap? Because when you are looking at how transactions happen all over the world, okay, that particular time marked the beginning when two major economic blocks of the world have their trading session collapsing together. Europe, United Kingdom, they say they are not European Union again. So when each time I say Europe, I will also mention UK and North America. When they combine together, excuse me, in terms of economy, these are the two blocks. These are the two major economic blocks. All other parts of the world, we are following them. No wonder, sir. Out of 18 major banks that control the FX market in the world, 16 are in Europe and America. 16, they are in Europe and America. The remaining 2, Asia. So that is why we want our reference move to form in London, New York overlap, not just New York session. Okay? So once it forms like that, all right, we have a reference upon which our entry should be based. This trading is not complicated at all. When market want to complicate it for you, calm down. Where's your reference move? Okay, you are taking a trade. You are taking a trade. Upon what reference are you taking the trade? Okay, I just told you now. I took the second trade of the week. This second or third now. Gold. And I'm taking it from here. What is the reference? What is my reference? This is my reference. But this my reference was not formed in London, New York overlap. But I know the reason why this reference was formed. The reason why this reference was formed is valid. Why? Because as at the time this reference was formed, Israel bombed Iran. Israel, they did a retaliatory bombing of Iranian city. And because of that, commodity price will rise up. So it was at the point that that thing happened in the night that this gold spiked up. And it was not a fake volume that spiked the gold up. And since it is not a fake volume, and I confirm that it's not a fake volume, by what? By studying the divergence. I saw, was it divergence or convergence? I see right here. Can you see? I see my convergence. I see my convergence. What do you see here? Boom. Higher high here. What do you see here? Higher high here. Higher high here. Can you see? Higher high here. Higher high here. I say, oh, goodness, money is coming. Look at it. Now listen to me. I told you, structure, we are correct. Pricing. Are we not at 75 here?
So,
Are we not at 75 to 90 here?
yeah, we are
So, in terms of pricing, are we not correct?
correct.
Correct.
Structure, correct. Pricing, correct. Timing, are we correct?
Yes, sir.
Say J. That is why I did not buy here in London. I waited till New York. When the market came here, timing, are we correct?
Yes, sir.
This is what is called 3-dimensional approach to market analysis. 3 dimension is correct. You take your trade, the highest is small dollar. But that you will lose. Nah, lie. That is why I took the trade right here. Now, going straight to your question, to the second part of your question. The first part is the reference move. The second part is whether you can use 15 minutes. Yes. Yes. Now, let me see. Let me tell you something. When I use this 15 minutes time frame and I've gotten the price here, this is my demand, right? If you take this chart to 1 hour, does this price change?
Yes, sir.
If you take it to 15 minutes, does the price change? The network is not too good. Let it just come up. Let it come up. That is why I proved to you that time frame, using 2 time frame for analysis will confuse you. Okay, let me refresh, please. We're already spending too much time. We're going to round up now. Okay, if you take it to 15 minutes, the same price. If you take it to 5 minutes, the same price. So you can literally take in 5 minutes time frame and look for your structure. Once you see your structure, everything line up, everything is confirmed. Does the time frame you take determine whether New York will start here or it will not start here? If you go 15 minutes, New York start here. If you go 5 minutes, New York start here. If you go 1 minute, New York start here. So what is your problem? Say you want to use 1 hour here, you are confusing, you confuse yourself. So 15 minutes time frame, if you want to trade it, stand on it. 1 hour time frame, if you want to trade it, stand on it. But the only advice I will give you is that if you use a moderate time frame like 30 minutes, 15 minutes, you will see your structure clearer. The structure I saw here that made me to take my entry here, if I am on 1 hour time frame, I wouldn't have seen the structure like that. Can I see the structure like that? Can I see the structure like that?
No, sir.
No,
No, sir.
that is why I go to 15 minutes. This 15 minutes or 30 minutes will give me a clearer structure. Can you see? Boom, 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 mitigation, boom. I take my trade here, right here, boom, boom, boom. The third trade of the week, all winner, boom, no loss, boom. It's as simple as that. If I don't know fundamental, if I don't know what is happening in the world, how will I have done this? That is why I'm also showing you Go to Forex Factory news session. Read the news that is happening there. I read them every night. Before I sleep, I read. When I wake up, before I look at the market, I read. That is a component of the dimension of a trading system or trading analysis. You can't ignore that dimension and you approach the market with a measure of authority and confidence. No, it won't work. It won't work. Since Monday, I have told you right here, since Monday, I think where on Monday? I'm coming. Where on Monday? I think here. We were here. Yes. We were here. Right here. Market was right here on Monday. I told you, do not look for sell on gold. Why? Because this is giving a continuation setup. Who remember? Fake flag. Down. When it comes here, it's supposed to sell. Am I right? Am I right? And when you look at your indicator, right here, lower low here, lower low here. This is a continuation setup, but I said, because of the current fundamental happenings, this sell will not happen. It is because I know some of you recognize this pattern. That is why I quickly send a message to you. Do not sell gold. Do not sell gold. Why? Because you are operating at 3 dimensions. I am operating at 5 dimensions. Where is the 2 last dimension that you are not adding? Technical indicator and the economic indicator. Yeah. I have read my economic indicator and I have seen that gold should be bullish. But the technical is telling me that it can be bearish. I say no. Fundamental will override the technical. These are scenarios, or this is a scenario where fundamental will override technical. Even though we are correct to sell this market from here, the timing is right, the structure is right, the pricing is right. We are correct to sell here, but one thing has failed this setup, and that is the economic indicator, which is part of the 5 dimension, which some of you may not know. But because I've taken my own to that level, I know what is happening. That's why I send advanced message to you in the group. Do not sell gold. Do not sell gold. Rather, look for your buy. Since that day, excuse me, sir. Excuse me, mom. Has gold come down since that day?
No, sir.
Any other question? Another question?
Yes, sir.
Okay, tell me your name and your question, please.
Charles.
Okay,
Charles.
All right.
Sir, apart from this RSI, is there a way we can know when a particular trend is about to reverse?
It's possible there are other ways, but this is the only way that I know.
Okay, sir.
Hello, sir.
Yes,
I cannot stay here that there are no other ways. There are many people that know many ways of doing things, but it is only our own way that we know. This is the way we know. All right? But then we don't just use the RSI directly. There are other things we learn before we see the necessity for RSI to test. RSI, there's a topic we call trend analysis. RSI is just a testing method to confirm the structure that is before us. It's just a confirmatory measure to show us that what we are doing is right. We don't use it exclusively. No. We don't. It is our structure, but it's a measuring tool to test our structure and give us confidence about the trade we are taking. Is that okay now? So if you are just using only RSI with structure, only RSI, but where you know, another thing.
Okay. Yes, sir.
Okay.
So quickly, I want us to review USGPY. I sent the trade setup to the group, the masterclass group yesterday.
Okay.
There was a liquidity sweep. I took my feed from there to the upside on a
Where's
4 hours time frame.
4 hours? You are trading 4 hours time frame. You will go stay long, go. Wallahi. It takes time for the structure to develop. That's the problem. It takes time.
I went out to 15 minutes time frame to take the trade.
Where's your liquidity sweep? Where's your liquidity sweep? Right here.
Yes, sir.
If this is your liquidity sweep, then what is the rule on liquidity sweep says? What does it say? if you have a liquidity sweep, what happened before you take the trade? You told me you are analyzing 4 hours time frame.
Yes, sir.
Okay, that's number one. If you have a liquidity sweep, and then
I waited. Okay.
Hold on. Let me tell you something. You have to be mindful of this, and everybody listening to this. Everybody listening to this. If you say this is a liquidity sweep, where is your break of structure here? If you have this, let me draw it. Let me draw my own schematic, please. I'm not going to take this as liquidity sweep, and I will tell you a reason why I will not take it as liquidity sweep. It's not just when you have boom, market retrace, you just call it liquidity sweep. No. If this market came like this, what do you see here?
Break of structure.
Yes, market has broken structure and has given you intention that it wants to buy. Okay? If you now come right down here, okay, already structurally, this is a discount price action for upside. Okay? Okay?
Yes, sir.
And after I gave you mitigation here, it now swept to the upside here. Correct? You can call this place liquidity sweep with that. And in that case, you need this market to just come down to within the sweep and you take the trade to the upside. Right here to the upside. Do you get what I'm saying now?
Yes, sir.
Because you must get an intention to buy before you are sure that the buy will take place. Do you know that at the level that this market is, it can also decide to start coming down, retrace all this sweep, finish. It will take it. After that, mitigate here, and then develop structure here, mitigate, before you now buy. So everything that happened here is still within the range of the buy of the bullish trend, but in the corrective mode. It's still in the corrective mode. It has not given indication for a buy because you never had a break of structure. You never had a break of structure here before this sweep happened. If you had a break of structure here, it means that you have a reaction, you have intention to buy, and then you are having mitigation, and it's even leaving the mitigation zone quickly. In that case, you'll be looking for pullback to buy more. But right now, you are still within the consolidation zone. You are still within the consolidation zone. So there is no intention to buy yet. Now, tell me, if that is the case, what am I going to do next for me to take a setup? That is the question. If I tell you I'm not comfortable with something because it doesn't follow theory and logic, then I should be able to give my own opinion. All right? So now, if you have this like this, within this consolidation range like this, okay, and you have this move to the upside, break like this. Take care of your baby, please. If you have it break like this, okay? Let's control the person. Okay. So if you have it break to the upside like that, all right? If you have it break to the upside like that, that's very fantastic. Very fantastic. Then this place become your inducement. Am I correct?
Yes, sir.
What did we say when an inducement level is left behind an unmitigated weak in a buy market?
Therefore becomes a demand.
That place become a demand. So this zone become your demand zone. So what you need right here are two things. You have to evoke your confirmation. Boom, boom, boom. If you have a convergence here, correct. All you are looking for is I can bet with my life I can. When this market gets here, it has no business to pass this level. It's going to go to the upside. This is how to analyze the market. Boom. Boom. Can you see? Boom. I can bet it with my life I can. It will happen like this. Can you see? But now, Another scenario is if it continue to come like this, struggle like this, struggle like this, struggle like this, struggle like this, and come back here. It has come back to demand. Even though it didn't break structure here, you need to now look at this place. Boom. Test it with divergence. As this one is coming down, this one is going up, there is divergence. Any push up, boom, to create structure like this. Coming down like this, take your trade to the upside. I don't want to give too much here because there are a lot of people who have really paid so much. Some people pay $2,000, $1,000, $500, $700 to get to the mentorship group. I cannot show everything here. If I'm showing everything in a session that combines those in the mentorship and free group together, I will be doing a disservice to those that paid for my time, for my effort, all the sleepless nights, all the research I've done in the past. Some people paid for it. Okay, and it will not be fair. I won't be fair to them showing every details in a combined class like this. So guys who are in the mentorship group, also limit how you ask your questions when I have a combined class. That is not to me that those in the free group, I don't want to teach you. I want to teach you, but it's just that it's good I balance everything. Why you gain little from me that you can use to trade and make money? For you to be an expert, you must have to follow me directly. Okay, for you to be an expert. Okay, but if you just want to make little money with the little things I teach you, you should be able to help your life with that. Is that okay? Am I correct? If I'm wrong, please let me know. If I'm correct, let me know. Am I correct? Olakunle, am I correct?
Yes, sir, you are correct.
All right,
Thank you, correct, sir.
Thank you
You are
very much.
correct,
Thank
sir.
you very much. So that's where we're going to call it a wrap for today. By next week Friday, I'm going to give you another crazy idea as far as forex market is concerned. Please go through this video again. Know how I trade. See how I do market screening. See how I select my pairs. Some of you that say you trade one pair, you are deceiving yourself. Let me just tell you that one before I go. I'm repeating it. If you look at how I screen the market, how I do the analysis, how I do the market screening, how I read the news and all those things, if somebody is trading only one pair, will it be easy for the person?
No, sir.
Will it be easy for the person?
No,
No,
no.
Come on, don't deceive yourself. Oh. Say you are trading one pair, don't deceive yourself. Better go 5, but screen them at a time is 1 you are going to take. But that one is the one that represents your best opportunity. Okay, that's the one that represents your best opportunity. So that's how it is. So ladies and gentlemen, I'm going to process the video and I will send it to you. I will send it to both the free group and the mentorship group. So that's why we'll call it a wrap. Bye bye everybody.